So this video is going to be covering risk management, money management, and just looking at the thought process that goes through entering a trade and knowing what you're looking to enter. So with this trade setup, the reason why we got in was a break of this low here. Candlestick above this high was the stop loss, and the take profit's clear down here at the bottom. So some of the general rules that you want to consider is having a larger stop loss than take profit, and here's a couple reasons why. If you have a stop loss that's larger, let's say that you have a 1 to 2 risk reward ratio, and so let's say that your stop loss is 2 times greater than your take profit, that means that you would have to win twice in a row in order just to break even. If you lose once, then you actually go backwards 2 steps. So if we have a general rule of thumb to look for trading opportunities that have just a 4 to 1 ratio, that would give you the ability to have to only have to win 25% of the time. You have to also consider that you may not win every single time in your trades. Let me just give an example here. Here you may have actually thought the market was going to continue going upwards. If you didn't look at support resistance back in the history, you might have either read the market incorrectly, so you might have got in this candlestick right here. Your stop loss may have been behind that wick or this swing low, and just expecting the market to continue going upwards, and it didn't, and it hit your stop loss. Okay, so there are trades that may not work out and may just not have that point of view. But for instance, if you look at certain trade opportunities based on the break of this candle here, your stop loss is either halfway of the candle or below this candlestick, and your take profit is obviously larger than your stop loss, then you're going to have an advantage on your trading account if you keep your lot sizes the same. So if you have a more of a pip standpoint and looking at trading opportunities that can gain you a lot of pips, this also can help you build your trading account. So one thing to consider, again with risk management, is that you want to look for statistical trades. You want to know why you're entering the market, your trading plan. Okay, so you want to know why you're entering, why you're exiting, if the trade doesn't work out, and ways to protect your risk. Okay, the next step, just to give you another idea, we see resistance, resistance acting as support. You might have read the market incorrectly right here. If you would have been patient enough, you would have saw this candlestick pattern right here to enter the trade for a sell opportunity down there and having a stop loss above this wick high. But again, you might have misread it. So that's exactly why we want to, if you saw this red candlestick, you might have entered there. Your stop loss might have been up here. And again, your target point would have been back down here. So when you misread it, then again, if we have the risk reward in check, that means that I might have lost on that one trade, but you come back to the chart because this is a day chart. You might have saw the setup and said this is a better setup and won on the trade to rebound from the loss. Okay, so let's look at this situation here. We saw the market came up and we saw a reversal candlestick pattern or indecisive candle right here. Entry point behind the wick low, stop loss above the swing high, and looking to take profit at the bottom of this support level here. Okay, so again, good risk reward is very important. The next way is to actually calculate your lot size. Okay, so let's actually bring up a calculator here. So how do you determine your lot size? Now this will also consider how many currency pairs you're trading, as well as how big your account is. So if we're only focused on one currency pair, then that would have the ability to trade with a lot heavier lot size. So if I have a $10,000 account and I'm willing to risk $500 of the account, if the trade doesn't work out, then my balance would be $9,500. But let's actually look at what this $500 can do for us as far as risk goes. So if I have a $500 risk setting, if I trade with one standard lot, that gives me the ability to have a 50-point stop loss. But again, with our risk to reward ratio, then we're looking to gain $1,000 from that trade if we have a 2-to-1 ratio. In this case scenario, we're looking at a 4 or 5 risk to reward ratio. Another way to look at it is if I decide to trade with one mini lot, that would give me the ability to have a 500-point stop loss. Okay, so if I was to again base my trade on a bigger time frame, that may be the case. You may have to have a bigger stop loss as in comparison also a take profit, which will give you the ability to take those kind of trading opportunities. The next step is if I decide to trade with multiple pairs, how do I deal with this $500? If I look at in a standpoint where if I have 5 trade setups that I want to have, that I'm looking to take advantage of, and I expect maybe 2 to work out of the 5. Again, we want to make sure we have a smaller stop loss in comparison of take profit. If I decide to trade with those 5 pairs, if I decide to trade with one mini lot, then that gives me the ability to have 100-point stop losses on all the trades. Okay, so again, you want to keep it simple. You want to know how you're entering as far as your lot size. It's very easy to see an opportunity and just go ahead and pull the trigger and enter the market, and your trade is just too big or too small in comparison of what you're looking for. So if you already know what you're willing to risk, this also can help you be able to walk away from the trade or have manage the trade for you. But that's just one idea to make sure that you know what you're willing to risk. Okay, so that's kind of the idea about lot sizes. The other way to approach things is you can actually use percentages. Percentage of the account size can also give you the figures that you're looking for as far as risk management. Like I said, with trading the markets, you may not be 100% right. Okay, so that is the idea, to have a bigger take profit than stop loss. And so I'm just going to kind of walk you through the mentality of placing a trade. So we see that there's resistance here and support here. We also see resistance at the top as well as the bottom. So right here is the market price. The market, if it does come up here, I'm going to be looking for something. Either I'm going to look for a reversal candlestick pattern or a way to enter the market to trade downwards. Okay. If I already have that mentality and I know why I'm entering, if I decide to use a trend line to enter the market, then I should already know what lot size I'm willing to risk, and knowing that if I decide to trade with a big heavy lot size on this one currency, then I shouldn't look at other currency pairs until the trade works out. Either it hits my stop loss or my take profit to free up the margin. So let's look at this market here. If the market does come up here and engulfs, then I'm looking at an area where I may have an entry point right around here. Then my stop loss above this wick high. Okay, so you already want to know where you want to stick your stop loss, and that would give you the ability to find out what lot size you want to trade with. Once you figure that equation, then you should also consider where you're going to have your take profit in this general area. Okay, so once you have your take profit, you set your parameters. When those parameters are met, then you walk away, and then you can update on your trade and see how things are working for you. So that's the idea of looking at a trade opportunity to know what kind of risk you're taking. Again, if you decide to look at multiple pairs, you want to already configure or know what lot sizes that you're willing to trade before placing them. So again, if you want to pre-calculate what your general stop losses are, this will have to be based on what kind of time frame you're going to make your decisions on. So if you're basing your decision on the bigger time frame, like the day chart, then obviously your lot sizes may be a lot smaller in comparison of these smaller time frames. Okay, so if you're basing your decision and if you're more precise of your entry and exit point and you know why you're entering the market, this also gives you the ability to trade with bigger lot sizes, but at the same time you want to make sure your risk is in check. You're able to either break even or move your stop loss into profits. So this just gives you the mentality to know not only how to pre-plan your trade, but also knowing how to use risk management and money management to benefit from these trading opportunities. Thank you very much.